So, you're looking for a clear and simple trading strategy. Well. You've clicked on a few videos looking for this clear and simple trading strategy, and you found a lot of videos that'll tell you that you can make $5 into $1 million in a day. And here you are with me, and I'm going to tell you precisely the opposite. Please excuse the microphone today, guys. I'm having to do this. There is going to be a few changes in the sound in the future. We've had a few issues, and guess what? My electricity's off today of all things, so that really doesn't help matters in the slightest. So we're going to do it manually today, and you'll just have to excuse the little microphone in my hand, which is a very unusual thing for me. This is not something that I would normally do on our videos. But let's get to it, guys, because today I'm going to take you to the charts and I'm going to show you the system that I've used for the last 30 years. A system that has made me profitable, or at least break even at times, and prevented me from going down into the doldrums, from ever blowing an account really disastrously or doing anything silly like that. Believe me, guys, we've all lost money in the markets. We've all won money in the markets. We've all had our good days and we've all had our bad days. But what you need is a simple trading strategy, a simple trading system that can help you to become profitable in the markets. And it's all about how you approach the market. It's all in your mind. It's all in the psychology behind your trading. It's all about the business plan. Because if you don't have the correct business plan, if you don't follow a strategy, you're not going to be successful in the markets. And believe me, guys, and this is the last thing you want to hear. And a lot of people are very controversial about this with me, and they say they don't believe me when I tell them this, but the market is a 50-50 game. And the reason the market is a 50-50 game is because the market is made up of buyers and sellers. And every single buyer and seller in the stock market believes that they have a winning strategy. Well, would you believe that? Every single trader in the stock market, or trading Forex or futures or whatever it is you're actually trading all of them or not, on every time frame, on every time of the day, they've all got a strategy, and they all have a strategy that they believe is going to win. So do you really believe that you've got a better strategy than a pro that's been in the market like myself for 30 years, and you're going to beat that person with your strategy that you paid? I don't know how much you paid for your course. Whether you paid $1 million, or whether you paid $1,000, or whether you paid $50 for your course. It doesn't really matter at the end of the day. What you've walked away from is a course that's taught you how to play with the squiggly lines. But unfortunately for you, the stock market is not about squiggly lines. All that does is give you the edge that you need to approach the market with your trading, to ensure that you'll have a system that you can work around to manage your risk and to become profitable. Wow, it is interesting working with one hand. I normally work with both hands. This microphone thing is quite interesting. But anyway, it's only for today, guys. Next video, this will be gone. Right, so we're going to go to the charts, and we're going to have a look on the charts at a system that you can use that will help you to manage your risk, which will help you to get ahead in the market, and it'll send you in the right direction when you're approaching it and when you're trying to set stop losses and that sort of thing. We trade price action. We don't use indicators. We use support and resistance, sometimes supply and demand, and sometimes we'll use maybe a fair value gap or something like that. We use trend support and resistance. We use normal support and resistance, but we keep it simple. We don't need the stars to align on the left and the stars to align on the right for you to take a trade. It's actually so much simpler than that, and so much easier than that at the end of the day. Why people make it so complicated? Well, it doesn't make sense to me. It might make sense to you to have a really overcomplicated mathematical advantage system, blah blah thing, but you honestly don't need that, because a person who's never traded in their life before could throw a dart at the chart and say, I want to go long, and beat you at your own game, just by having the right approach when it comes to how they manage their losses and how they manage their wins. But after we've gone to the charts, I'll show you how to do that, and I'll show you how that works, and I'll show you how you can be a profitable trader in the markets. Guys, trading is risky. 80% of traders do lose money. And if you don't like risk and you don't look like losing money, then, well, you probably shouldn't be trading. And I would advise you to look for something else. But if you don't mind that sort of thing, and you've got the ability to have a bit of an adrenaline rush and head in there head first, then maybe it's the right thing for you. Guys, while you're here,
drop down to the description, get your funded trader account if you need one, get your free Forex book. The Forex book's totally free. It's just there. It's a PDF. You can download it, enjoy it. And yeah, let's go and have a look at the charts, and let's go and see if we can show you a system that will help you to become profitable in the markets. There are 3 ways that we trade in the markets. The first way is with a trend, and that is the most important way to trade, is with a trend. The trend is your friend. And you find that if you trade with a trend, most of your success will come from that area. So this is a trend. It's going up, up, down, up, down, up. And there's a trend resistance and there's a trend support line simply below it. Very easy to take on. We take our levels from the day charts, and then we trade on the 4-hour chart to make it a little bit easier for us. The first way that we trade in a trend would be quite simple. We would take this trade long because it's sitting on the trend support, and we would put our stop loss below the trend support so that if it breaks out of that area, then we would determine that the trade has invalidated. It is no longer valid, so it would be no longer valid at around the 19,200 area. Then I would work out, let's say, $1,000 stop loss. How many contracts can I take? With that, then I would work out how I can take a profit at 204, 203, or somewhere up there, which is 3 or 4 to 1. It's much better. Take smaller losses, make bigger wins. The other way that we trade is in a range. The FTSE is a good example of that, where the price just stays in a straight line in that range for a long period of time. So it's in the range, it's up the top, it's at the bottom, it's at the top, it's at the bottom, it's at the top. And these are really great to trade because when you're trading in a range, you can simply trade them off the top and you can trade them off the bottom. So there's your resistance and there's your support. The easy way to trade the resistance and supports, whether they're in a trend or whether they're in a range, is simple. If you get a green bar coming off the support and it closes, you can take a long trade. If you get a red bar coming out of the resistance and it closes, you take a short trade. And that's as simple as it gets. There's no worries about retest or FVGs or anything to that effect or complicated issues. Straightforward. If you want to do a break-in retest, what we call that is when it breaks through the resistance, comes back, retests, and then continues on long. You get a nice strong green bar out, which is closed, and it will go long. But otherwise, when it retests and it breaks back through, then it's short. Then it has failed. It has not complied. Sometimes they don't retest, but as you can see, this one did. This breaks through what was resistance and is now support. It goes up, it comes back, it retests. There's your retest, and then it goes long, and off she goes, and it goes into a long trade. But that's how you trade a range, and you trade your trend trading exactly the same way. You wait for the green bar to come off of your trend support, and you go long. You wait for your green bar to come off your trend support, and you go long. Wait for your red bars to come off your trend resistance, and you can go short. Simple. No need for retests here. No need to worry about things that are over complicated. Then the other way that we trade is it's counter trading. So what you're looking for here is a trade that counters the trend. This has not countered the trend. This has broken through, come back to retest and carried on along. Had it broken back through here, that would be a counter trend which should have broken the structure and it would have been countering going the other way. And the reason we trade on counter trends is because it looks overbought or oversold. So you're at the other end of the spectrum. It's not supermarket mentality where it's expensive now, so we're going to sell. No, when something's expensive in the markets, it means it's really good and you want to be buying it. The only time it looks like it's time to sell when it's in an overbought position and you want to counter trade is when it's broken the structure and it's falling over. Then you can start looking at counter trades. For example, this Aussie US dollar is not a counter trade. It is continuing on going short. A lot of people would say, but this is cheap now. It's in the support. There's a green bar there. Let's go long. You can only go long on the Aussie dollar US dollar when it breaks this high, because then it's breaking the structure. Once it breaks the structure, then you can take it long and go the other way. You cannot counter trend something if it hasn't broken the structure. What you've got to watch out for are these flag patterns. These flag patterns resolve. So it's going up, creates a bit of a range, and then it carries on going up. They resolve to the upside. Very careful of those. Gold, here's a flag pattern. It's going to resolve to the upside. You don't want to counter trend this unless it breaks the flag pattern. Unless it breaks the pattern completely. In this case, it was breaking the pattern and it was starting to look long, but I called this short based on this, and look where it is now, all the way down here, calling it short. This one
still short. It's not trending, still going short. So what you got to do is, if you want to counter trade, you got to wait for it to break up. You can use a trend line to do that. You can draw a trend line through here. Say when it breaks the trend line, then it's going to break its structure and start heading up in the other direction. Then you can also use the retest systems as well if you want to. Now, the simplicity of it is you simply go to a day chart. You just bring it into a level where you can see what's going on. You put it on a line chart, and then you put your resistance and you put your support in where you want to see what the markets are going to do, where you want to see where your resistance and where your support is. Why do I bring it to a line chart? Because the line chart gives you closing prices. Closing prices are better than on your candles, which are highs and lows. You want closing prices. So you take it to the line chart and you look at the areas where the resistance is hit a number of times where it doesn't want to go further. And the reason I draw blocks is because a line doesn't determine where the price is going to change around. It's an area where there's orders, where there's people buying and selling stocks. It's not lines that buy and sell stocks. They're human beings that leave orders in this area. So there's a general area here where you could say there's a strong likelihood that the market's going to turn around again and do what it did in the past and go the other way. Same goes for the support. You look for an area where it keeps on getting to the bottom and going up, getting to the bottom, going up, getting to the bottom, going up. These are areas that you're looking for that'll say to you, at the end of the day, well, it looks like as it did in the past, it's going to turn around and go up again. And the way we determine that is, as I told you earlier, you look for the color of the bars. And that's why I keep them green and red, so that I can see when the red bar closes going down. I can see when the green bar closes going up. But I take my levels from the day, trade on the 4 hour, take it back to the 4 hour. And then when I'm on the 4 hour, I can have a look at where these trades are going up out of this support level. Simple as that, really. It's not rocket science and it's not difficult. And you can do it with trends as well. The reason I use trend lines on these products here, like this DAX, is it's kind of hitting all-time highs. There isn't much of a resistance here, and I would prefer to, because it is running in a trend, run it on the trend. And I use lines on the trend because they're just easier to draw in than rectangles. We've got lines running up here. This is a support area. It keeps on hitting that support area and bouncing on up as it did in the past. You get green candles coming out of that. You can trade it long, and it should, by all means, carry on long. It's easy, like I said earlier, just work out where you want your invalidation period to be. It's an invalidation area. It's an area where if the price hits that, you wouldn't take the long trade on any given day. So that means that trade is invalid. Then you take the stop loss and you get out. So put your stop loss in that area. Then you work out the size of your trade from there to go long and how much profit you'll make from it. Very easily done, not difficult. When you come to the 4 hour charts, look for areas where there might be a trend, or there might be a supply, there might be a demand area. Look at my previous videos on how to look for those. You can look for little fair value gaps where there might be some money lying as well, because there are smaller areas on the smaller time frames that can give you some confluence into a trade. Or if you're trying to take a trade in the middle of this range, you might be looking for a reason to take the trade. But don't force trades, let the trades come to you. So that's the charts. That's how the charts work. And while you've been looking at the charts, my arm's been getting tired holding this mic up, waiting for you to come back so that I can tell you all about how you can approach this and how it can make you a profit in the markets. Now, for those of you who don't know me, I'm sorry, I haven't introduced myself. I'm Rob, and I am here to show you how to trade for free. And the reason I do this is because so many people out there are trying to tell you that you can turn $100 into $1 million, that you can turn $5 into $1 million, and simply by using some squiggly lines and a few systems, you can get rich quick overnight. And I'm here to tell you that the market is not an ATM, and it's not a lotto game, and it's not a gambling casino. It takes years and years of hard work to overcome the strategies and to learn how to trade in the markets. You didn't become a doctor overnight. You didn't become an accountant overnight, for those of you that are. You didn't become a mechanic overnight. These are things you had to study for. So why is it that you believe that you can get into trading and you'll be able to do this overnight? Why do you believe that? Why do you think that you don't need some kind kind of experience, some kind of learning, some kind of study that goes towards it. It's not difficult to learn. Let me be honest. The actual strategies, the actual systems in the market, you can learn them rather quickly, particularly if you're a qualified person and you've been to school and college or varsity or whatever it is you are. 9 times out of 10, it won't take you long to learn how to manipulate the squiggly lines on any particular system. You can use any system that you want in the stock market. You can even use no system whatsoever. But what you've got to understand is how to get around it psychologically. And here's the funny thing, guys. You'll go and you'll do a course or you'll learn from me for free, perhaps. Maybe, I don't know. Well, we'll see. But at the end of the day, you'll know how to operate those squiggly lines. You'll do it on a demo over and over and over again. And you'll think, I've got this. I know how to do this. And then you'll put real money in the market and suddenly everything changes. Suddenly the whole world changes color. Suddenly your heart starts pumping. Your blood starts moving faster. The adrenaline starts rushing as if you're being chased by some kind of dinosaur. And you think, what on earth is going on? And that's your fear receptors kicking in. That thing in your mind that we call fear. Fear is a horrific thing, guys. That's what starts operating. Now, the best way to work around fear is to understand where your limits are. So when you're starting out in the markets, when you're doing a demo, you're risking $10,000 a trade and you're throwing money at it and all the rest of it, and it's going well. And when it comes to real money, you risk $10,000 on a trade, and you almost have a heart attack, and you think, ooh, that was scary, because it starts going into the red at $1,000 a point or something equally ridiculous. Well, how do you get around that? Here's the thing, guys. You've got to risk within your means. So the best way to do it is to think to yourself, well, how much am I prepared to lose per trade? Firstly, am I prepared to lose $1,000 on a trade? Am I prepared to lose $100 on a trade? Am I prepared to lose $10,000 on a trade? And you have to understand that this is different for every single individual, because it really does depend on what your wealth structure is and how much money means to you on any different given day. For some people, $1 means as much to them as another person will only feel that $10,000 means the same amount. So it is really dependent from person to person what their risk structure is. So I'll use a round figure and I'll say, let's say you decide that you're comfortable with $1,000. So you risk $1,000 per trade. To do that, you should really have a $100,000 account, because then you are risking 1% per trade. And if you risk 10 trades, then you're risking 10% of the account, which is pretty safe. End of the day. If you're in funded trading, it's going to be more difficult, because 9 times out of 10 they won't allow you to risk more than 4% of the account on any given day, or 6% on the overall account, making it more difficult for you to take these trades. So I would be careful in that scenario, but then just work on a different risk structure. But let's say you've got cash, you've got $100,000 in the account. What you decide to do is you say, I'm going to risk $1,000 on every trade. Now, don't change that for every different trade. You've got to keep that the same right across the board. You cannot be changing it. You can't change it for every trade. Once you've risked that $1,000, and when you take your first live trade and you see it going into the red, if you're not comfortable with it, if you feel like it's bankrupting you, if you feel like you're not going to sleep at night because of the loss you're taking on that trade, whether it be a couple of $100 or whatever, then you have to change your risk structure. I mean, really, you have to think about it. If your heart's pounding through your head and your blood's pumping at a ridiculous rate and you can't handle the loss that's going, you've risked too much on the trade and you've got to change your risk structure. But let's say it's fine and you're happy with risking $1,000. You've paid $1,000 for the trade. You're prepared to lose that money and everything's fine. Then all you got to do, your business plan is simple. It's a 2-step business plan that you don't even have to write down. So by the way, just says that, well, come on, why write it down? It's a 2-part business plan. But here's the thing. You risk the $1,000. The first thing in your mind is, I've lost that $1,000. That's gone. I've paid for the trade. Then that you've got to try and work your trade so that you're going to make $2,000 or $1,500 or $3,000. How do you do that? So what you got to do is make more on your wins, lose less on your losses. The trick here is not to move the stop loss down further away when you start going into loss. If it goes into loss, you have to learn to take the loss and walk away. That's the invalidation point that you chose before you even started taking the trade. So just accept that that's the area that's going to be the area that it's going to get taken out if it goes into loss. Accept that. Now, don't change that. But when it goes into profit, let's say your trade goes nearly $1,000 into profit. Then what you got to do is, this is part 2 of the business plan, by the way, is take your stop loss and move it up to cost or move it into profit. But keep it about $500-$600 away from the profit. Otherwise, it's just going to get taken out every time. And then every time it keeps going up further and further, you just keep moving your stop loss up behind it. Don't let the fear get you to sell the trade when it's in profit. It goes $500 into profit. Click, I'm out of here. I'm taking the profit, because any profit's a good profit, right? No. Not really. Not really. At the end of the day, what you're looking for is as much profit as you can possibly get. And the only way you're going to achieve that is by letting the trade run. And the only way you can let the trade run without taking a loss on every trade is to move your stop loss up to cost, or to move your stop loss into a profit and follow the trade. But don't put the stop loss too close until the trade has reached the profit target levels, whereby you can put the stop loss really close, because if it gets taken out, then you've made your profit that you wanted in the first place. And if it carries on going north, then of course, well, let's be honest, you're making a decent profit from it. And that's all it takes, guys. It's really simple. It's really easy. It's not difficult. If you're not sure, watch a few of my previous videos, which will go over it again and again and again. Guys, do come back for the live show tomorrow, which is the USA Open, and we're going to talk a little bit further. Come and chat with me. Let's have some questions back and forward. I'm here for you. We can do this together, and we can try and make you into a profitable trader. I'm the slow trader. You might even call me, it's like the tortoise traders, the turtle traders, they used to call them. We trade slowly. We're not trying to rush. We're not trying to trade on 5-minute charts. We're not trying to trade on 1-minute charts and try and get this done as quickly as possible and then take huge losses. What we're trying to do is make a profit in the markets, and that takes time, and that's not easy. Learning to become a trader could take you longer than a couple of days. In fact, longer than a couple of months. It could even take you a year or two to become profitable. Guys, it's not simple. It's not straightforward. I'm with you on this. I feel it. I've been there. I've done that. Sold a few t-shirts. Guys, let's go on. I'll see you tomorrow at the live show. And I want to thank you for watching this. I hope it helps you. I hope it gets you in the right direction. Till the next video. Cheers, thanks, and bye.